Why are macro people interested, or why did they become interested from 2011, 12 onwards in crypto? And one after the other, most of us have moved across in one way, shape, or form. It's because macro looks at the structure of global economies, the financial system, and the opportunities that that give. We'd all noticed, because it was our job to notice, that we'd become the most indebted society the world had ever known. So we'd become entirely financialized. And that's a whole topic for another day and why. But this is where we are. And by creating perverse incentives, we made it worse. So if you worry about debt, well, the thing that happens in a recession is you end up cutting interest rates to make sure the debt doesn't blow up. The lower the interest rates go, the more the debt goes up. And so you end up in this mess. And all of us looked at this from about 2000 onwards, after Asia had blown up in 1997 from a debt crisis, and everyone thought, okay, this is going to blow up the Western world. That leads us into 2008. Now we've got this super indebted system, record household debt, record corporate debt, record government debt, record housing debt, and we blow up the whole thing. So the answer to stop everybody being decimated, in particular these baby boomers who are edging towards retirement, was to cut interest rates and then do another piece of magic, which is printing money, quantitative easing, to inject more money into the system. That saved the system. Also, massive fiscal stimulus. It saved the system, but again, created more perverse incentives because now money was free. Interest rates had got to zero and they were giving it away. Every time the economy became weak, they were pushing money to the banking system and say, go and do something with this. So it created what seems to be an enormous asset bubble. And we'll come a bit onto that later. But that whole thing, everyone looks at in the macro world and said, this is going to blow up. And the only way it's not going to blow up is if we've got an alternative. And lo and behold, I started back in 2012 to look for a solution. I was in Europe. We'd just gone through the 2008 crisis, and then Europe almost blew apart. We almost lost our banking system. And I thought, I need to find the world's safest bank. I need to find something as an answer here because, everybody's going to get totally fucked if this happens. So then a friend of mine came to me, a guy called Emil Woods, who was a hedge fund manager at the time. He said, you need to look at Bitcoin. And so I took a proper look at Bitcoin and I thought, you know what, this and the blockchain technology was going to allow us to record ownership of assets, which is the problem in an indebted society, who owns what. And then I started to realize it had other benefits. So I started investing in 2013, 12, 13 in Bitcoin. The first time I bought it went up 100% and I sold it immediately. I'm like, wow, that happened in a month. Didn't quite understand what this thing was. And I did a lot of research on it over time and have been involved. I knew that the next recession, these two convergent paths were going to meet because the next recession was going to take more quantitative easing, more fiscal stimulus, and there were no interest rates to cut, really. And lo and behold, March 2020 comes along and there's the signal. It's like, okay, we're going to blow everything up. If we're not careful, we need people to move across. And people did in huge numbers. The adoption of the entire digital asset space is now running at twice the speed of the internet at the same number of users, 140 million users. Now, if people remember, the internet between 1990 and 2000 was the fastest ever adoption of any technology in all recorded human history. And that was 63% a year in those first 10 years. It's growing at 113% a year. We've never seen anything like this. And this is this migration. And, if we step back and say, what is all of this stuff we're talking about? It is literally tens of thousands of really smart people in real time building a new system. And it's not only just a financial system, it's the whole system of value and a modern future that doesn't rely on the past. And if they can scale it fast enough and build it robust enough, when the other system eventually fails, most of us will be safe. Generally speaking, crypto is uncorrelated by pretty much every metric you look at. It has passing correlation. Sometimes it follows bond yield. Sometimes it follows tech stocks. Sometimes it follows nothing at all. Sometimes it follows the dollar. But generally, it's uncorrelated over anything more than a few months, except one point, which is in a panic. And everything is correlated in a panic because that's when the system that's over-levered says, hey, I need some margin. So, that's the deposit you put on a house for your mortgage. But this is a real-time system. So the banks say, hey, listen, your investment's gone down. I need some surety from you. So people sell anything. That's never going to go away. And people are very new to this market in the crypto space. And they saw what happened in March 2020. And they think that, therefore it's correlated. No, everything gets correlated in that moment. Everything goes to a correlation of 1. And that's okay. That's one of the risks that we have in a levered system. But otherwise, what is crypto? Well, let's start with Bitcoin. It's easier to start with. It's essentially this store of value idea, but it's still very volatile. It doesn't look much like gold or dollars or bonds, which are much less volatile. So it's very volatile, but it has this store of value property that we all understand. But why it's so volatile, it has a call option on the future, which is this whole digital asset space. What is the Bitcoin blockchain going to be used for and how many people are going to use it? We don't know. But I'm not going to price that as 0. If I did, it would be priced like gold. But if you're going to price it as some probability of some huge exponential outcome, well, then it's going to be more volatile because you have to keep reassessing that. And it's going to trade in this ridiculous fashion where it can move in huge increments very fast. Also can drop, but it's based on the probabilities of the future. And the whole space is based on that. So if you think of all currency markets are basically based around the dollar. So, the Indian rupee or the Indonesian rupiah or the Chinese yuan, they're all based around what the dollar's doing, really. All bond markets around the world are based basically what the US bond market's doing. And everything else is further out the risk curve. So this whole space is going to follow Bitcoin. And some of it will be uncorrelated for periods of time because there's something else going on, a bigger driver. But generally speaking, in the risk-off events, when people have got excessively bullish, they'll probably repatriate back to Bitcoin, probably Ethereum as well. But when they're feeling confident like people are today, they're moving further out the risk curve. So they're buying, JPEG rocks, and that's further out the risk curve. So there is correlations and non-correlations, but overall, it's not correlated to the existing financial system over a meaningful period of time, apart from a 2-week, 1-month panic. And that's amazing because that gives us an opportunity that we know that it diversifies the risk that we have and gives us a new risk and new rewards.
Let's just kind of close off on this idea of a Bitcoin life raft, because I know that's kind of the starting point, right? The way that you can exit this world of debasement of currency, of taxation, of inflation, the starting point, if you wanted to exit that system or hedge, is the Bitcoin lifecraft. Could you just talk us through that as a concept?
So, firstly, okay, how does this financial system manifest itself, the blowing up? Is it going to end in a bang, which is what everybody thinks? The dollar goes to 0 and everybody blows up and all the banks blow up. That's not going to happen. And the reason being is they've discovered a magic trick, which is you keep printing money and you hide it. But what that actually does is lower the value of your purchasing power. So if you look at it in different terms, your same salary buys less of a share of the S&P 500 bar of gold or a share of a Bitcoin than it used to before they started printing money. And every time they print money, these things keep accelerating away. What are assets? Assets are your future consumption. You store your money in an asset, and then later you sell it to allow you to spend it. That's what assets are. So you're being able to buy less future consumption, i.e. you're poorer in the future. And so that creates a big problem. The other thing is the governments are kind of bankrupt, by having spent so much money trying to bail out the economy so many times that they're going to tax you more. So therefore, your income's going to be less, your future's going to be less. This is not good. And they've got the risk of banks blowing up and other things, which means you could lose all of your capital. So you've got a sinking ship. It's probably sinking slowly, but like the frog in the boiling water, you don't really realize it. And most people don't really understand it. They keep looking for the wrong thing, the dollar to go to zero or something to happen, and they don't realize they're already getting screwed. But there's the life raft, which is Bitcoin. Because Bitcoin, with its restricted supply and its outside of the banking system, no leverage, basically, or over collateralized, with the recorded ownership, is a way of putting your assets into something that over time should do extremely well. Even if it's just because the central banks keep debasing the currency, Bitcoin will go up just by that amount. But as we know, it also gives you a call option on the future. So what you've got is an asset class that's currently, just Bitcoin alone, is currently just under $1 trillion today. If we look at the size of the global equity markets, global bond markets, global real estate markets, they're all between 100 and $200 trillion. So what could Bitcoin be worth if that life raft takes us to dry land and gives you a chance? It's probably worth $100 trillion. So it's got 100x to go from here. Nobody watching this or listening to this will ever see an asset in their lives go up 100x that's already gone up 2 million %. So it's the opportunity of everybody's lifetime to actually create wealth, and it protects your wealth for the factors such as, excessive taxation, although you can't really get out of the tax system, but it gives you optionality. It also gets you out of this currency debasement cycle that we're in. Also, we're in a very difficult world. Part of my exponential age thesis is the rise of technology such as AI, robotics, and all of these things. These are all going to be taking jobs away and opportunities. Salaries can't go up over time because you're competing with the machines. And if not, you're competing with somebody else elsewhere in the world. And we've got the baby boomers in the workforce at the same time as their kids, which has never happened before. So there is no salary going up. So the only way of generating wealth is to make the right investment decision, or be lucky enough to start a business, or be in a business that pays more money. So that's the magnitude of the opportunity of this life raft and what it can do for people.